Welcome, ladies and gentlemen, to Commodity TV. And it's my honor and pleasure today from Austria. I want to talk a little bit about gold and especially about our gold stocks we have in the portfolio and the developments here in March and April, because it's really interesting. Well, what are the facts? Gold reached $3,500 per ounce as President Trump continued to spook the markets with his action statements. And also the pension funds from China are buying heavily. Gold rose above over $200 an ounce last week, despite the long Easter weekend, which is also really, really interesting. China's 10 largest pension funds are allowed to invest 1% of their assets in gold, which will trigger further buying. Sources say this could be up to 30% of gold supply annually. And of course, Mr. Trump, his tirades against Fed Chair Powell sparked fears that the Fed's independence is over and that he might be fired. So that would not be really seen positively from the financial markets. We are also thinking here of an emerging potential of a US debt crisis, because here is a loss of confidence. We were talking about this many years already. Yeah, and also Trump's weakening of the central bank independence will further weaken the US dollar and the bond markets, of course. And last Sunday, President Trump said the golden rule of negotiation and success is he who makes the gold makes the rules. Interesting that they are counting their bars in Fort Knox. Let's see what comes out of that. Well, we have weak equity markets and the 10-year yield rose to 4.4%. And the flight from the US dollar index has fallen below 100 due to the strength of the Japanese yen and the euro, and also a little bit with the Swiss franc. Investors prefer gold to US treasuries and the US dollar. Now a few more have probably woken up finally. Trump's erratic government approach and the impact on rising inflation from tariffs will hurt the country badly. Gold ETF holdings continue to rise to around 90 million ounces now, but are still below the 2020 and 2022 levels. There is a lot of more room for improvement, ladies and gentlemen, and this will go on. The US debt is due and needs to be refinanced. Next 12 months, $7.6 trillion, which is 31% of US public debt, including a large amount that has interest included also. Next 18 months is $9.2 trillion to be refinanced. 48 months, meaning the next 4 years, $28 trillion to be refinanced. And to honestly, I'm not sure if there is even calculated the additional debt Trump wants to put on. The US debt stands now at around $37 trillion. Honestly, who buys that junk? I don't know. Well, investors need gold. The allocation in the portfolios is way too low, and there is also a lot more room for improvement. And thanks to Frank Holmes from US Global, they are doing a terrific job, US Global investors, with those fantastic charts. And also inflation adjusted. I found this chart really interesting. Thanks again to Frank. With the logarithmic scale, if we look from January 1978 to April 2025, now we finally made, after 47 years, an inflation adjusted all-time high. That took really long. So I think we are here to see much higher gold prices. If we look at LBMA in London, the warehouses are emptying in gold and in silver. And I'm looking forward to see the April statistics, which will come out in the beginning of May. Yeah, gold is record high, as we just said, and this is amid the trade war anxiety. And so from that perspective, I think now investors are back buying gold, because we see the gold price moved upwards, but the ETF holdings were not really moving with that. Now we came close to that, and that's interesting. So that means also here people woke up, people are buying, investors are buying, and those are the new guys. So let's have a look here on the chart. We see for our price targets 3,300 and 3,600, which we communicated totally openly over the last 18 to 24 months, have now been reached. This is done. So we are ready for a correction. The correction can go to $3,000, $3,050. If it's getting a bit harder, it can go down to $2,850, $2,900, but that would be the real buying level or re-entry level, definitely. For 2026 to 2028, we have $5,050 and $6,250 as price targets now. Yeah, when will the mining stocks really take off? That's the big question of the question, because you see, there is still a lot of room. The last 12 years, nothing really happened. Gold prices are rising and rising and rising, but the miners are showing no strength. We think this might change quite soon here. Excuse me. Then let's have a look on selected mining stocks. Let's start with Fortuna Mining. Sorry, the chart still says Fortuna Silver Mines. Stock charts has not updated the name. We have a price target here now of 14 Canadian dollars. We think the company is extremely strong. It is a buy, especially at $9.50 or above, because then we have again a cyclical buy signal. Osisko Gold Royalty is our top performer in the sector. The company delivered everything they promised, and the stock is rising, rising, rising. We had $24, $32 price targets. This is all done. Now we have raised the price target to 40 Canadian dollars. Top job, thanks to the team. Yeah, Sibanye-Stillwater, the company was in rough waters the last 2 years, and you see that in that sideward trend here, but we think now they have the reversal done upwards, and this is the ADR. We have a price target of $10 and for the share approximately $2.50 because the company has now a great new setup. Skinner, fantastic company, next new large gold mine, and they just won also their trial against for the Albino Lake facility, which has a lot of additional gold in, which was not calculated yet. And we think 30 Canadian dollars is the price target. We are super positive for the company. Thanks for the great job, guys. Yeah, Calibre Mining, fantastic company. They have performed extremely well. We had a $3 to $3.25 Canadian dollar price target, which is reached now. They want to merge with Equinox Gold. We think the merger makes now really sense after studying more facts. And we have a new target price of 6 Canadian dollars, which you can then impose onto the new company. So that looks also great. Sierra Madre Gold and Silver, they started in January with the commercial production, and unfortunately we have no pointed figure chart because the company is too young, but still with that chart we have a $1.30 to $1.50 price target because the team also here is doing a great job. And First Majestic Silver is here a huge shareholder with over 40% in the company. Osisko Development, long suffering over the last 3 years. The stock price melted really down like butter in the sun, but we think this is over now. This has stopped. And our price target of $2 to $1.75 in the low was reached. This is all done. We think the worst is over. Now is a great time to buy. I have also done that. And the first price target is $3.75, then $5, and then $9.50 Canadian dollars. Gold Royalty, also the company is doing a great job. Maybe they start a little bit too high in the price when they got online, when they had their IPO. But this is also now all corrected. We see the price here also extremely well based, and we think at $2 there is a breakout, and then the next target is $3 and then $4 and could go then even higher because fundamentally the company delivers fantastically. Southern Cross Gold was the merger from Mawson Gold with Southern Cross. Company is really fantastic, great assets in Australia and also in Finland. And we think $4.80 is a buy signal again. And we have a first target price of $5.50 and then immediately $7.50 Canadian dollars. US gold mining getting now really in the focus through President Trump and his help to bring mining online in the US. First target price 13 Canadian dollars, and then when we see the break above the 15, we think 19 to 22 Canadian dollars is absolutely possible. Goldshore Resources, a new company in our focus. We see a price target of 85 to 90 cents because with Michael Henriksen and the Moss project, that could be really something big. Gold mining, the company went a little bit sideways here the last 2 years, but we have still the first price target at 1.5 Canadian dollars, and if the price breaks the 160, we see prices of 2.5 to 3 Canadian dollars as possible. Orania Resources, yeah, high flyer. It was then, yeah, a little bit of problems with Ecuador, then with the financing, but still the company is refocusing and redoing their business model. We have a first target price of 90 cents. And if the price breaks above the 130, we see prices of 225 to 250 through the new nickel and gold assets they have now in Europe. Yeah, thanks for attention. That was the short overview. Make sure you have gold, make sure you have it physically, make sure you buy good quality mining companies, because this would be the next big move then here, and gold will move higher, but please be prepared. There will be corrections of $300, $400, maybe $500. Yeah, but this is only then another chance to really buy into it. Thanks for watching us, and bye-bye from Austria today.